Some major retailers are releasing earnings this week as companies grapple with the impact of tariffs from the White House. This morning, Target cut its full-year forecast, saying lower spending, tariff uncertainty, and rollbacks to its DEI initiatives. That's hurting the company's performance. Jordyn Holman is a business reporter for the New York Times and can help us understand the data and what this all means. Jordyn, great to see you this morning. How much of Target's struggles are within its control?
That's a fantastic question. So a lot of their struggles is around merchandising and bringing people into the store, which ideally isn't within their control. But one of the big things that all retailers are facing is figuring out a way to convince customers to come in who are nervous around higher prices because of tariffs, who already have so much of those discretionary items that Target sells. And so on the call earlier today with investors, Target executives are really pushing this idea of the Target magic, that they did have control in terms of bringing cool seasonal items, but that it is a very uncertain economic environment.
Yeah, you're right. Some people call it Target. I even see some ladies like to dress up to go to Target. I mean, it has its own space in people's lives. I want to ask you also, though, about Lowe's and Home Depot. They both had earnings misses. I'm wondering how they're navigating the tariff uncertainty and how that might impact home construction, which is so desperately needed.
Yeah, so Lowe's and Home Depot are in a different category of Target because they're so dependent on that homeowner. And we know that home sales have been sluggish. But one of the things that both of these companies point to is that people are staying in their homes longer. These homes are getting older, so you need to redo the floor and redo the kitchen. And so what they're leaning into, despite all of the tariff uncertainty, is this idea that they can negotiate with their vendors. They can have good prices for people who come in compared to smaller mom and pop shops. And then hopefully that will help them gain market share in this economy.
Yeah, and we know that with mortgage rates as high as they are, people don't want to leave a house that has a very low interest rate. So what does all of this say about the state of the economy right now?
Yeah, well, these retailers are really at the nexus of what's happening in this economy as it relates to tariffs, as it relates to prices, as it relates to consumer confidence. And what it really says is that it is a moment, if a company is very good operator, has the right stuff, they can convince more shoppers to come to them. They can win away some of their competitors' shoppers. But there's a lot of risk ahead. Like if they aren't properly ordering the inventory ahead of time to get ahead of these tariffs, this could be a real hit to companies' margins.
Yeah, and we're just looking at the Dow Jones Industrial Average. Market's open for less than an hour. It's pulling back 340 points. Interesting look at the economy overall. Jordyn Holman, thanks for joining us.
Thank you for having me.
Appreciate it.